Did you know that close to 90% of the world's millionaires have some sort of real estate exposure? Real estate investing can help you grow your net worth and develop new forms of income. In the past, real estate investing was primarily for investors who easily qualified for loans, usually those in a higher tax bracket. But today's changing times and technology have made it more accessible to make small investments. In this video, we've outlined 10 different ways to get your investment started in real estate, well beyond the basics of buying a house and renting it out. Hey everyone, this is Andy Hill with The College Investor, investing in personal finance for millennials. If you're new to the channel and like what you hear, please hit subscribe so you're ready when our next video comes out. Oh, and as you're watching, know that all the resources mentioned in our video will be available in the description below. Thanks. Number 1, get a roommate. Living with roommates is a great way to keep your living costs low. But if you own your own house, you can turn this frugal hack into a stream of income. If you own a 3-bedroom home, you may be able to rent out 2 rooms and cover your mortgage, for example. Depending on your phase of life, it may be relatively easy to fill these rooms with friends that pay you money. If you're interested in turning your house hack into a long-term wealth-generating machine, consider buying a duplex or triplex for your first house. You and a roommate can live on one unit while you rent out the other 2. Number 2, rent your garage or barn for cash. If you keep a relatively minimal lifestyle, your garage, shed, or outbuildings, if you live in the country, could be untapped gold for you. Companies like Neighbor.com, Stash, and Stowit allow qualified people to become hosts. They also provide insurance and a built-in network of potential customers. You can typically charge a few $100s per month to someone who wants to store their items in your space. If you reside near an urban area or close to downtown, you may also be able to collect a fee for people wanting to park in your driveway for a few days. Number 3, list your house or room on Airbnb. With Airbnb, you can rent out a single room or your entire house, condo, or apartment. If your city hosts a huge event once per year, think like a NASCAR race, South by Southwest, an enormous concert, or a conference, it may pay to vacate the city and rent your house to event attendees. Depending on the layout of your house, you may be able to rent out a single furnished room to people looking for a place to stay. Number 4, real estate investment trusts or REITs. REITs are a portfolio of real estate investments held to generate cash flow or appreciation. Publicly traded REITs often invest in commercial real estate like storage and office buildings across a geographically diverse region. Public REITs can be bought and sold through your brokerage. Private REITs are less liquid, and you may be required to hold on to them for years. Private REITs may emphasize land development, large rental properties, or other investment types. Companies like Fundrise offer private REITs, which allow you to start investing in real estate for as little as $10. Your small investment owns a tiny fraction of the underlying investments. Number 5, real estate syndications. Real estate syndications involve a group of people co-investing to buy a large real estate deal. A proliferation of online companies makes investing in real estate syndications easier than ever. With some of these companies, you can dip your toes into investing with just a few $100s. With a real estate syndication, you are a partner in an LLC. The person running the syndication will be the general partner. They also typically manage the property as well. 2 popular real estate syndications are Open Door Capital and Whitehaven Capital. Number 6, farmland investing. Farmland investors buy land and rent it out to farmers who provide the equipment, seed, and other inputs. You may not be an expert in finding farmland, but companies like Farm Together and Acre Trader can help you find and market your farmland. Number 7, long-term single-family homes. Buying a single-family home and renting it out for a year or more can provide stable cash flow. If you currently own your house and you're looking to move, check the rental prices in the area. If you can earn a profit by renting out the house, it may make sense for you to keep it rather than selling it. After a few moves, you may have a tidy portfolio of homes that will be paid off by renters over a few decades. Be sure to consider maintenance and vacancy costs when considering whether to keep or buy a single-family home. Companies like Roofstock make buying and managing single-family homes very easy. Also, another option is Arrived Homes. With Arrived Homes, you can buy fractional shares of single family rentals, collect rent, and experience property appreciation as well. Number 8, small multifamily. Duplexes, triplexes, and quadplexes allow you to buy one property with a conventional mortgage, but you can turn each unit into an income stream. In many markets, small multifamily homes offer the best chance for real estate investors to earn profits. These homes tend to appreciate at a slower rate than single family homes, so you'll need to buy with an eye towards cash flow rather than appreciation. Because you can buy small multifamily homes with conventional loans, you can use loan marketplaces like LendingTree to find the best financing options. You can also find multifamily listings on Roofstock as well. Number 9, vacation rentals. Renting out a property on Airbnb or VRBO can be a great way to earn money. By renting a property a week at a time, you attract much higher payments compared with long-term leases. Of course, the higher payments may likely mean higher expenses. Tourists are much harder on a home, and you'll have to pay someone to clean the house between guests, unless you plan to do that yourself. An important factor to remember with vacation rentals is that the income tends to be seasonal. Depending on your expenses, you may find yourself losing money, especially in your first few months as an owner. Number 10, commercial real estate. Commercial real estate involves buying properties for office, retail, medical, or other commercial uses. Typically, you rent the space out to businesses rather than individuals. You may want to test the waters if your own business needs a physical location. If you're a dentist, for example, you may consider buying a medical building for your practice. An owner of a hair salon may purchase a building with retail space and rent out the other units for tanning salons, restaurants, or other related businesses. Keep in mind that loans for commercial spaces can be difficult to obtain unless you have a track record as a profitable business owner. Well, that's our list, everyone. Which of these 10 real estate investing options are you gonna try? Please let us know in the comments below. This is Andy from The College Investor, and we'll see you in the next video.